Hello and welcome to Money Control. My name is Ashwin Mohan, and you're watching a brand new edition of Deal Central, where we get you the voices that matter from the world of mergers and acquisitions, private equity, and equity capital markets deals. Joining us on the show today is a very special guest, Rohit Chatterji, the head Asia Pac M&A at top investment bank JP Morgan. Rohit, thanks so much for taking out time.
Great to be with you today.
I would like to dive in straight to the buzzword. And this is indeed the buzzword across all business circles as well as the corridors so far, which is, of course, the Trump tariffs. In your opinion, what do you think would be the impact of US President Donald Trump's threats of reciprocal tariffs on countries when it comes to A, the cross-border M&A activity in the Asia-Pacific region, that's an area you look at, and B, the Indian economy?
So I'd say, firstly, it's going to introduce an element of volatility in the markets in general, because people will try and make a guess as to where the ball's going to go on the field next and try and position their business plans and their strategy for what they think will happen when things settle down. It'll mean that they'll have to reassess components of their supply chain. It'll mean that they'll have to figure out exactly where some of the acquisitions need to be made in order to try and position themselves for where sourcings will happen, where value will be created. So it'll be interesting to see how it plays out in my world. But clearly, now when you think about outbound from the region and Asia Pacific, there's going to be a greater focus on, look, what are the opportunities in the US that investors from Asia will now have to start thinking about seriously? And also now dollars coming into Asia, which markets do they go in? What's going to happen to now the operating competitive advantages of some of these businesses operating in APAC in the context of the changing world order with the Trump tariff? So it'll be interesting to see how it plays out. But obviously, there are going to be a lot of dollars following that point of view.
Right. Now, when it comes to the confidence index, so to say, where do you think India ranks when you compare it to some of its other peers in the Asia-Pacific region when it comes to factors that make it an attractive investment destination for both global investors as well as MNCs? Where does it rank in the pecking order?
It is, I would say, a continuing story of being a very strong and attractive market for people to invest in. Now, I'm setting aside now short-term points of view around valuation. But if you think about the longer-term trend, the digitalization of the economy, the entirely brand new emerging business models that get facilitated by digitalization, the long-term consumer demand, the need for healthcare, the need for infrastructure, the need for industrial capacity in many sectors, this is a very long-term growth trend. And people are underwriting now, whether through FDI or through portfolio investments, now, the trend that they believe will prevail for the next 10 years. I think, again, valuations aside, that is a very attractive component of that market. And when you also think about where growth is going to come from in India, a lot of it is now domestic growth. So it's a lot easier to factor in a point of view around that relative to an export-driven growth that now tends to get a little bit more focused on what are the regulatory changes and tariff changes that may enable some of those markets to be hot or otherwise.
Would you stick your neck out and perhaps say that India is the hot favorite in the Asia-Pac region amongst global investors?
For sure. Right. At this moment, yes.
All right. On that optimistic note, let's turn to a stat which is perhaps an unenviable trend when you look at the Indian markets, right? FIIs have sort of taken out more than $10 million this year. Now, many would argue that this is part of a broader emerging market sell-off, but definitely the Indian markets have been hit. You've been a banker both in India and overseas. What do you think is the reason for this sustained FII sell-off? And I know I'm asking you to crystal ball gaze over here, but when do you think there would be a reversal in this trend?
I think when you look at portfolio flows of that kind, you have to think about what's driving it, the 2-3 different things. One's macro. Now, the US markets become relatively attractive both for yield and now for shorter-term points of view around growth. And so money will move out of many emerging markets into that. The strong US dollar, that's a factor as well. The shorter-term points of view around valuations of traded stocks in India, which now were quite rich relative to some of the other regions and opportunities. But if you notice what's happening with the actual flow of dollars, a lot of the money that's coming out of the secondary markets is going back into the primary market. So the demand for the IPOs priced well, even amongst foreign investors, is actually very strong. So I'm not that concerned with shorter term pullbacks. It's often very healthy. But if you look at the trend and the demand from these investors for primary capital raises, it's actually a still encouraging trend.
Right. Now, in December, the Niti Aayog came out with a report, and that report said that India had limited success when it came to capturing the China plus one opportunity, and that there were others like Thailand, Cambodia, Vietnam, and Malaysia that were bigger beneficiaries. Do you think there is still a window left for India to do better in this front, especially when one looks at the fact that the Chinese economy's 2024 growth rate of 5% is still, in fact, the lowest in the past few decades?
I'd say, look, everybody's playing to a slightly different point of view around what they do well. Like India is a powerhouse in services exports, right? And I don't see that changing. In fact, the trend on that is still very, very strong. Yes, if you're looking for, look, how do we become a powerhouse in manufacturing? That's a very long dated theme. Now, we are starting to see some early elements of it, but to move a manufacturing ecosystem over takes a longer time. It takes the rest of the pieces to start to fall together. And it also needs to work to people's views about what's going to happen to tariffs long term, cost competitive advantages long term, now where do the markets go, etc. So there are a lot more factors. I wouldn't necessarily conclude that just because some manufacturing has moved to Vietnam, that it necessarily should be extrapolations that we should make about India's ability to compete for some things. Now, look at what we've got growing, right? It's a lot in services. It's also building out in EMS. It's building out in autos. So let it play. I recognize it's not everything at in a short duration.
Right. When it comes to big bang outbound M&A, I'm talking about the Bharti Zen, the Tata Chorus League kind of deals. There have been a few deals here and there, but nothing that moves the needle seriously. So when do you think these kind of transactions will return to corporate India?
I don't see that trend as becoming a very strong trend in the short term, in the next couple of years.
And why would you say that?
It's because the opportunity for investing capital in India and the returns that you can get for incremental capital invested in India is very strong.
Oh.
Now, the underlying growth, the demand, the opportunity now is so strong here that if you were to just rank choices, India would probably rank very highly. And therefore, I think capital formation that's happening domestically, I can see that even for strategic investors to be the attractive destination here. So for that reason, I'm not sure that a lot of capital moves out of India, particularly for strategic investors. We may see some in some sectors. And where having a footprint in a place like the US is therefore long-term important for your strategic direction, yes, we'll see some, but I don't think it's a trend that I'm expecting to play out.
Right. You've been a deal maker for several years. You've spent time in India as well as overseas. And you would have recognized the fact that in the past few years, especially since COVID, the global funds have become, so to say, the new strategics. They are the ones signing the large checks, the $1 billion plus checks. And to a certain extent, the strategics have been left behind. In some sectors, of course, strategics are making a comeback in the past 6 months or so. So let's now focus on the global funds, and I'll pocket them into the sovereign funds. Then you have the pension funds, and then, of course, you have the traditional bulge bracket global private equity funds. Which of these three, Rohit, do you see being more active when it comes to sealing buyout deals in India, and why?
I'd say you'll have continuing interest from the global private equity funds and the sovereign wealth funds, because both of them are seeing their investable pool of capital continue to grow. And when you start to then think about where do you deploy it, where do you find growth, and where can you make an investment that you can hold for a 10-year period, I think a lot of those opportunities in the emerging markets rest right here. So I think both sovereign wealth funds in some shape or form and private equity funds are going to be very long in India for a period of time. And it's also built on pattern recognition and success now, and funding elements of capacity creation that you think are going to be picked up for the domestic market without necessarily having to depend on global macro regulatory changes. Again, as I said, I mean, India is a place where a lot of those opportunities lie.
So you spoke about opportunities. What would be your top sectoral picks when it comes to India M&A? You spoke about the role of funds plus strategics. Where do you think there will be maximum M&A activity going ahead in 2025 in India?
So just looking at where we are active, I would say it's infrastructure, renewable energy. There's a big ongoing need for capital on the green transition. And there's a lot of global financial and strategic interest in that. I would say it's healthcare, pockets of financial services, banking, insurance, because that's another way to play the Indian economy. I would say those are the more active sectors, and business services in some shape or form.
Right. You mentioned renewable energy. Is ESG still a buzzword, or are different companies looking at it in different ways?
They're looking at it in different ways. I don't think we see the words ESG be used as often in that format. But the fact is, every corporate, in some shape or form, is looking at what their strategy is for dealing with the transition to green. Whether you don't need to be a energy company to be focused on it. Now, you can be a manufacturing company, you can be a services company, but everybody is thinking about, look, how do we address this longer term trend towards creating more sustainable sources of energy? And I think India is going to be now again a player in that trend for the long term. And it also means that people who invest in that sector, both financial investors and strategics, will look at a market like India and say, look, they're doing the right thing. There's a long way to go. Here is an investment I can make and sit on for the next 6, 7, 8, 10 years.
And it's not just the private sector. Recently there was an example of two large PSUs, ONGC and NTPC.
Yes.
They tied up to strike a mega deal in the renewable energy segment. So everyone's, in a certain way, is taking these net zero targets seriously going ahead.
Absolutely.
Right.
No.
Let's take you back, Rohit, to the beginning of your career.
Yes.
You cut your teeth as a manager in ICSI Securities, and that was during the 90s. There was a listing boom over there. Cut to 2025, you're seeing a similar kind of a listing boom. So many new and exciting companies,
Yes.
Going ahead and listing. If these sectors had been spoken about a few years back, one would have really wondered whether they could make it. But look at the number of new sectors, category creators that are hitting the markets. What do you think is driving the frenetic activity this time around? Because the reason I'm asking this question is because despite the markets being choppy, the IPO market is having a party. India is the busiest IPO market in the world.
Yes. I'd say if over the last 20 years, right, what's the biggest change that has created the opportunity for a number of companies to grow, blossom, and then head to the capital market? I'd say it's the digitalization. And you're seeing it in many forms. You're seeing it create business models in consumer tech. You're seeing it create business models in financial services. Now, you're seeing it disintermediate many other businesses that existed. I mean, you're obviously seeing it create competencies in tech services that are obviously an export from India to the world. So the ability to, and the government's been a hugely supportive enabler of all of that changes to occur. And the ability to use that trend towards digitalization to create really scaled up businesses now with great cost structures, profitability, huge addressable markets, has created what I would call a very different set of opportunities in an ecosystem where now a lot of early stage entrepreneurs have gone and built very successful businesses that are now ready for going public.
Sure. We are speaking about companies going public. Last year, we saw Hyundai Motors registering India's biggest ever IPO. The South Korean peer LG Electronics, that's also filed its draft papers for an IPO. You look at the Asia Pac region, of course, from an M&A point of view. But what's the feedback that you're getting from some of your colleagues at JP Morgan? Are these two blips on the radar, or are we seriously going to see many more Asia Pac giants looking at listing in the Indian markets?
There's a different strategic reason for every corporate to consider a particular point. No, a particular option.
Multiples in India would be one of them at least.
Yes. Yeah. Now, so if you're looking at surfacing the value of your business in India, yes, an IPO is a great way to do that. If you're looking at funding your Indian business through local capital, that's one. If you're looking at creating a currency with which you could now acquire businesses locally and grow, that's another one because it's so expensive. So you might as well have your own funding currency locally. But there are just as many reasons where you may say, you know what, I'll prefer to own my business 100%. Like if it's an integral part of a global supply chain, you may say, look, it is now, I have an opportunity to build in India, but I'd keep it as a 100% subsidiary. So I think for each particular client, it's a slightly different reason for why they may consider it. But it's also possible that they go down different pathways in their own conclusions about whether it makes sense for them.
Right. In the past year or so, there's been a top deck reshuffle at many of the top investment banks in India, many of the foreign investment banks. Yours is one of them.
Yes.
Recently, you saw a change of guard. We saw two new heads of investment banking for India, Nitin Maheshwari and Ravi Shankar. What is your plan when it comes to the M&A vertical in India? And are you looking to sort of reposition your strategy with these new heads on board?
Well, I don't think we are planning a change of strategy. Now, both Ravi and Nitin have been with us for a long time. They're both very successful leaders that we built up internally. I think it's continuing to execute what we've got going. Now, we've got great momentum in this market, whether it be on the capital market side or on the strategic M&A side. They have good track record. We've got good traction with a lot of clients. So I think we remain very, very focused on doing the right thing, bringing good ideas, executing well for our clients here. I don't think it necessarily represents a change in strategy.
Happy with the team, well, by the way?
Well, no, they're growing for the right deals. No, so they're getting better.
All right, Rohit. On that note, let me thank you once again for taking out time and speaking to us. Pleasure interacting with you, and all the best for the coming quarters.
Thank you very much, and it's good to see you.
With that, it's a wrap on this edition of Deal Central. Thank you so much for tuning in. For more news, views, and updates, keep watching Money Control.